Hello. So today's chapter is about absorption versus exhaustion to find good universal entities. Let's figure this out. Okay, I think that's good. Perfect. So absorption versus exhaustion. The difference between continuation and reversal is who is still willing to transact. Price moves reflect participation, continuation requires commitment, reversal requires exhaustion, order flow reveals intent. This chapter explains behavior, not patterns. Position begins with participation. Why this chapter matters. Many traders confuse reversals and pullbacks. Prices alone does not reveal intent. Absorption and exhaustion explains outcomes. Understanding behavior reduces false signals. This concept prevents premature entries. And then execution improves with confirmation. Institutions watch participation, not candles. So this is kind of the biggest idea that when a market goes through an entire move, like let's say a falling knife, it's a kind of good way to understand how a falling knife works. When there's not any volume in the market anymore, you slowly see a turnaround of volume or buyers entering the market. The problem is that sometimes with a falling knife, certain times the market can keep on going down after a little bit of a sideways movement because there was no more market movement. So then there's more liquidity that comes in because you need a buyer and a seller, leading to then the market falling farther down into a greater hole. And that's how a lot of people get stuck on falling knives because you never really know when the market's going to go back up. But sometimes if you wait long enough, you can deal with exhaustion. Exhaustion leads to absorption, and then from there the market starts going in the opposite way, and that's a good swing reversal trade. What is absorption? Absorption occurs when orders are absorbed. Large participants defend price. Opposing pressure fails to move price. Volume increases without progress. Price pauses despite aggression. Control remains with the dominant side. Continuation becomes likely. Here, actually, one more time, just so I even understand what that means. Control remains with the dominant side, and then continuation becomes more likely when there is, yeah, this kind of thing with more volume coming in and this price is being accepted, and then from that point, there's more shorting occurring in those levels, and there's more pushing and more, yeah, more absorption into the downside or upside, depending on which way the market is looking that day, if it's bullish or bearish. Aggressive buyers meet strong sellers. Aggressive sellers meet strong buyers. Price holds key levels. Wicks form without displacement. Liquidity is absorbed. Inventory is managed. And intent remains intact. Of trying to find a new accepted level of liquidity. That is mostly the biggest part to it. Sometimes it's stop orders. Sometimes it's there's good news coming out. So then you want to have bigger hedge funds, want to get into those positions. So then you start stacking from a way lower level to fill up all their orders, and then they can kind of go stop hunting in those kind of ways. What is exhaustion? Exhaustion occurs when participants fade, aggression fails to continue, volume decreases at extremes, price struggles to make progress, and momentum weakens. Control begins to shift, and reversal risk increases. So I might have made a little bit of a mistake on explaining how absorption works, but it's pretty much the exact same thing, just either two different outcomes. Either it gets absorbed, and then there's more volume that gets pushed into the market, or exhaustion occurs, and we slowly can see a reversal. And that's why it's very good to have somewhat of market sentiment and understanding the structure of what is exactly occurring, having some indicators of volume, and there's that YouTube guy or Instagram guy, Nicholas Crown, that explains a really good four ways of understanding all this delta and option decays and those kind of things, depending on which market you're actually trading. Exhaustion in practice. Price pushes without follow through, breaks lack continuation, extensions fail quickly, structure begins to weaken, liquidity is consumed, trap traders appear, direction becomes vulnerable. Yeah, that's kind of the thing. Absorption versus exhaustion, key differences. Absorption holds prices in place. Exhaustion allows price to fail. Absorption supports continuation. Exhaustion precedes the reversal. Volume behavior differs, and structure reacts differently. Context defies outcomes. Failed auctions. Failed auctions are signal rejections, price tests and is refused, acceptance does not follow, participation dries up, directional bias weakens, reversal gains probability, and confirmation is required. Traps and false moves. Breakouts can be traps. Liquidity attracts price briefly. Absorption hides true intent. Exhaustion reveals weakness. Retail reacts late, and institutions wait for confirmation. And this is kind of the idea of being exiting liquidity to the market. When the market drops to a certain extent, you sometimes then have that wonderful thing where you get stuck in certain things like exit liquidity. So if the market drops a certain amount of points and you're trying to get into this falling knife, then sometimes if you don't read it correctly, it can actually be a reversal, and then yeah, that's kind of one of those problems with those things. So that's why one needs to actually be curious or be careful with what they do in those markets, because then just like IFEGs, Q3 IFEGs are very wonderful to see in these kind of things because they show an acceptance of the reversal, which is very, very, very important. Absorption and structure. Absorption often occurs at structure level. Strong structure absorbs pressure, weak structure fails, continuation requires defense. Structure confirms behavior, and alignment increases confidence. So, if certain indicators align, it's a system. That's the system one can trade. A Q3 inversion, there's certain things occurring in those ways. Very great play, very, 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 very good structure and setup. If you understand how Q3 IFEG truly works, one of the greatest patterns like this one right here, and then it goes back down. It might shoot back up one more time and take out all the stop losses that are in profit or in those stop losses that are in profit. So maybe not always try to do that. You kind of go for two trades in a row, but then sometimes you miss the entire major move, which is totally fine because a profitable day is still better than nothing or being in negative. Continuation requires defense. Structure confirms behavior. Alignment increases confidence. Context matters. Absorption and liquidity. Absorption consumes liquidity. Exhaustion follows liquidity. Depletion stops fuel both behaviors. Liquidity resolution reveals intent. Sweeps test commitment, and reaction confirms control. Timing improves clarity. Yeah, waiting for the perfect move and being patient is better than trying to catch a knife all over again and catch it all over again. It just does not make sense to keep doing those kind of things because you're not fully in the market, but it's kind of good idea for hedging, which is kind of the idea for a hedge fund. So if you're dealing with MNQs or micros, in theory, it's actually a very good strategy. If you slowly can see that there is volume stepping in, if there's other things, then you can slowly start stacking up. And if you were a quant, it would be the right idea of actually trading in that kind of way. Common mistakes: assuming every pause is a reversal, confusing pullbacks with exhaustion, ignoring volume and participation. Trading before confirmations is sometimes risky, but it depends on the strategy that you use. Forcing counter trends entries is also very dangerous, with the example of the falling knife, overreacting to single candles, and lack of patience. The institutional view: institutions manage inventory, absorption protects positions, exhaustion signals distribution, execution follows confirmations. Behavior outweighs patterns. Risk is managed first. Discipline creates consistency. Absorption and exhaustion in action. Okay. Price pushes into liquidity, reaction reveals behavior, absorption holds direction, exhaustion breaks structure, bias shifts accordingly, execution becomes clearer, patience is rewarded. Key takeaways. Continuation requires absorption, reversal requires exhaustion, participation reveals intent, volume confirms behavior, context defines probability, patience prevents traps, behavior drives outcomes. You now understand market behavior. Next comes strategy, construction. So this is a very good next chapter to be part of, and framework replaces impulses, and consistency becomes possible. That's one of the most important things in trading overall. So that is the chapter absorption versus exhaustion, and yeah, I hope you guys enjoyed. God bless. Mm-mm-mm-mm-mm-mm.